Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review or end of market day analysis of European markets for the Monday 9th of November 2015. Be sure to visit www.cfds.com, the leading specialist in spread betting and CFD brokerage. Alternatively, you can visit the educational site, which is www.cfds.education, to certainly learn more. Okay, in terms of the market close, we have the indices here. DAX down minus 1.6%. We have the FTSE down almost a percentage. Quite a substantial sell-off today. We have the CAC down 1.5%. Oil obviously under pressure. The dollar's flat on the day. Yen slightly stronger. The Shanghai, although we had the Shanghai up overnight and the Nikkei higher overnight, that's obviously failed to follow through. Okay, let's see exactly where these markets are headed. Okay, now obviously the market sold off quite substantially going into the European close. We can see that as being evident with the German DAX. You can see here bearish engulfing candle, bang right into the diagonal trend line support. If I go to a 10-minute chart, you'll be able to see the true extent of the sell-off. Quite a substantial sell-off at that. Obviously 11,060 high, almost 200 odd points down to 10.8. I think we're currently trading on the DAX around the 10.800, so almost 200 odd point sell-off. Okay, now we have support with regards to German DAX here at the 10,780 level. That certainly is a support zone for the German DAX in the interim, and that should, was expected to hold. We have this diagonal trend line support that certainly has out the equation now. So 10,780 certainly remains support on the German DAX for now. Okay, if you go to a 60-minute chart of the German DAX, you can see that we even failed to hold this key diagonal trend line. So that certainly is out the equation now. If you retest that, we'll certainly find out exactly how markets react. You are looking at a potential pullback here. You do have support obviously at this 10,800 level on the 60 minutes chart. So certainly expect a semi-bounce. Now, even with the talk of a deposit rate cut, obviously in December, there was a Reuters article today. The German DAX still failed to hold on to its gains. Not only that, we had the Nikkei in Shanghai positive, stronger German data, Eurozone Centix investor confidence stronger as well, and yet the market still failed to obviously hold on to the gains. Now, also given the fact that you had the stronger dollar aside of the equation, that still failed to hold on to gains. So given the fact that you have a stronger dollar, you have a weaker euro, and if I go to the chart of the Euro USD, you can see that we did thrust higher, and the pivot low was put in at 1.0730 on the Reuters story, and ever since then obviously we've short squeezed higher on the fact that we had this risk off scenario, and the market has obviously come back down ever since. Now we certainly seem to be basing here on the Euro USD, so again we'll certainly find out whether or not there is an article I just read recently with regards to whether or not the deposit rate cut is already priced into the euro. It's a good question. Okay, and time shall tell with regards to that. Now, again, all eyes is on the European markets and as to the next direction there. Now, the euro certainly still remains under pressure and therefore will help European equities going into the close going into tomorrow from my perspective. It's whether or not this rate cut story has any legs and causes the euro to fall. We have had some hawkish comments from the likes of Mr. Rosengren, prefers first hike to rates before shrinking balance sheet. Okay, so certainly looking at hawkish rhetoric again putting further pressure on the euro to a large extent. So again, all eyes will be on that in terms of the price action there. Okay, now the sell-off. Very, very spectacular sell-off towards the close. Again, I was expecting this Friday. I was expecting it to a large extent overnight, given the Chinese data, and yet the markets failed to do so. If I go back to the German DAX again, and I'll be able to elaborate there. If I go to the 10-minute chart of the German DAX, if I go to the market open today, if I start, you can see that as soon as we came out the gates, you did have a initial sell-off, then a rally back up to the highs, back up to 11,000 before we subsequently sold off. So what do we attribute the sell-off to? Well, first of all, Chinese imports. That's what we can obviously, given the fact that the drastic drop in Chinese imports certainly hurt US and European equities to a large extent. Volkswagen concerns, obviously we already know. The fact that we had weaker Chinese data overall, CBI downgrades, concerns over Greece and Spain. I think that's really a highlight that you need to focus on today. It's concerns over Greece and Spain. Okay, now there were two concerns that re-emerged, and that certainly hurt the actual European equities, even given the fact that we did rally on Friday post the dollar strength and obviously euro weakness, and yet we give all that back today. So very strange. I mean, we rallied as high as 11,060 only to fall 250 points thereafter. So very, very strange price action to say the least, and very, very baffling and confusing to a large extent. Okay, so especially given the fact that we'd rallied quite substantially, and one was expected to certainly hold that. Now if I just bring up the diagonal trend line, now given the fact that we had the Shanghai and the Nikkei higher overnight, I did expect a sustained move higher. Initially I was expecting weakness, given the fact that you've got Chinese import states obviously hurting sentiment, etc., etc. That obviously didn't transpire, and then the market was consolidating above here, and I was expecting the symmetrical wedge breakout based on a weaker euro to continue. And given the fact that the German DAX on the daily chart has an unfilled gap at 11,300, I expected that to be closed, given the fact that we had stronger German data this morning. Okay, so, and that obviously unfortunately wasn't the case, and the markets obviously have sold off, putting a bearish engulfing candle. So certainly is a different approach to these markets now. Again, any potential bounce will be short-lived up 10,900, 10,920, and looking for a potential now for a right shoulder to be put in on the European stocks, and that will be based on the fact that you have Euro USD weakness. So Euro USD support, or strength should I say. So if I go to the chart of the Euro USD, you can see here you are looking at potential a right shoulder being put in on the Euro USD, and obviously a subsequent reversal. So if you look at this pattern here, and you're looking at a right shoulder, and then obviously off you go to the races. So again, potential reversal on the Euro USD, even with regards to talk of this rate cut, certainly not having the intended side effects either. So again, this is going to be very interesting going forward. Okay, now the actual focus on the rest of the indices now in terms of the French CAC. Let's see exactly where that's positioned, or the Euro stocks first of all. If I bring up a daily chart, you can see there's a bearish engulfing candle. We obviously failed at 200 MA. Obviously you have an unfilled gap here at 350, so certainly a lot of talk of that being closed based on a technical level. Now we are into horizontal support on Euro stocks, so you are going to see support around this 3420 level, and we are looking at a potential bounce. Whether we trade sideways based on the weaker euro, again, that's certainly something to take into consideration until the euro will start to break out to the upside, unless Mr. Draghi has anything else to say. Although he has committed himself to QE talk, that should certainly keep the equities supported going into the Christmas period. Okay, 10-minute chart on Euro stocks. Again, you are coming into horizontal support at this 3415 level, and therefore I am looking for a potential bounce here, especially given the fact that the Shanghai and the Nikkei were higher overnight. So it's very hard to see the market certainly closing any weaker. And now you do have this diagonal trend line support as well, so there is a double whammy of support at 3415 on the Euro stocks. Okay, now the French CAC, if I just bring that up now, let's bring up the French CAC. Here we go. So you have a daily chart of the French CAC. Again, bearish engulfing candle at gap fill, so certainly sold off. 60-minute chart on the CAC itself, certainly weaker given the fact that we've actually broken down. Now you do have previous resistance equal support, and obviously horizontal support at this 4900 level, if I'm correct. So certainly all eyes on that zone. Again, observe. Given the fact that we have started to make lower lows and lower highs now after this double top scenario. Okay, so you are looking at potential weakness. So any potential push or thrust higher up to a 4930 level will act as resistance, given the fact that previous support equals resistance now on the French CAC. Okay, so on the 60-minute chart. Now the 10-minute chart of the French CAC itself, you can see that we have sold off quite substantially, and there isn't any real support on the French CAC on the 10-minute basis until we get to this zone at 4895. There is previous support, previous resistance equals support at 4900. Again, any lift high up to 4935 will be your first area of resistance. Now, it's very strange to see the CAC sell off quite substantially, given the fact that we did have weakness in terms of the euro today, and you also had this falling, contracting wedge pattern and looking to certainly break out on the upside. Now, France and obviously concerns over Spain certainly have dictated the sentiment in the markets at present. Okay, so that certainly seems to be the two variables that the markets are obviously focused on at present. So again, it should be interesting to see how this market closes today, and whether or not the market has this risk on or risk off tone. Okay, now the FTSE 100, the last indices to focus on. Again, the all eyes is on the HNS formation. The daily chart is indicating weakness, and the next level of support is 6270, so certainly remain open to that. The 60-minute chart itself, again, like I said, HNS formation. The next level of support is 6270. Other than that, it's very hard to envisage any type of support holding. Okay, and again, all eyes on the S&P 500. We are obviously pushing off the lows now, and this is going to be certainly very, very interesting as to what happens next in terms of the price action here. Bring up the chart, bear with me 1 second. So bringing up the chart of the FTSE 100 here now, just recap here. Daily chart certainly is looking very weak at present. Although having said that, there is a chart I need to show you, which is the CRBQ. If I can just bring this up and show you again with regards to the dollar itself. The dollar certainly remains weak. Oil is certainly holding support, especially on the daily chart. If you can focus here on the daily chart, you can see that it's holding support, which obviously leads to the fact that gold is certainly holding support, and in turn copper certainly is holding support as well, especially on the daily chart. Copper is certainly into support and putting in a potential bottoming candle here, which is going to be very, very important. Now this goes in synonymous, or goes in confirmation to the CRBQ. Now let me just bring that up for you. Now that's interesting because the way in which it's positioned at present, so bear with me whilst I just locate that for my commodities. Okay, so it's the GCC, okay, Guggenheim as well. If I just go back to EU indices and certainly add that option there as well. So GCC. Bear with me. There we go. Okay, so if I go to the daily chart, and you can see that we are into double bottom support on the Guggenheim. Okay, so this generally indicates support. Okay, and certainly is indicating bullish price action for commodities going forward. Now that adds to the fact that the dollar is potentially now factored in all the bullish news flow. Okay, especially given the fact that if I bring up the dollar chart today, you can see we haven't really had any sustained movement higher. Okay, and the 10-minute chart itself has this unfilled gap below that we certainly need to close in the 10 minutes. Okay, so that's certainly, and there are multiple obviously gap levels below. Now we have had Mr. Rosenberg certainly indicating hawkish attitude or hawkish comments with regards to a potential rate hike, and that certainly is, obviously we need to be vigilant of that. But the way in which this price action is, or price action is moving in regards to the market itself, and especially given the fact that commodities are now into support as well, especially as you can see with regards to oil, gold and copper, and the commodity index is certainly indicating so as well. So it's going to be interesting with regards to the FTSE. If we do fall but down to this HNS target of 6260, we have 6270 horizontal support here, then obviously you do have 6180. But I can't see a drop as fierce and as sharp as that. But very impressive. Certainly have to respect the HNS formation on the FTSE 100. Certainly have to respect that thus far. Okay. In terms of the Aussie itself, certainly has shown immense promise and certainly has shown immense strength. As you can see there, no lower lows this morning, and also with regards to the Kiwi as well. So certainly impressive. Okay. Now be vigilant of the FTSE itself on the 10-minute chart. The horizontal supports which I've given you at 6270, 6280. Okay, and with regards to the FTSE 250 itself, certainly is indicating weakness as well. Although we are coming into horizontal support on the FTSE 250, which indicates support on the FTSE 100 as well. We did have a bottoming tail with regards to that, so the right shoulder has exceeded 75% as well, so that's certainly something to consider. But we are into horizontal support on the FTSE 250 going forward. The actual S&P now, we are bouncing off S&P after building that base at 2070, so it should be interesting. If we do pop, then you do have this 2080 as potential support, and we'll see how the S&P reacts there from. Okay, so I think that's a wrap in terms of European markets. Be sure to remain vigilant on the downside, although we are coming into support on European equities given the fact that the euro still is languishing at the 1.0750 region. Okay, that's a wrap. Be sure to visit cfds.com for your trading needs. Goodbye now.